Welcome into the crypto bunker. Today, I want to talk to you guys about crypto, Bitcoin, and Ethereum. What's going on? We obviously talked the past couple of videos about the potential of a reversal. I believe we've gotten that reversal. I think we've gotten to the point of where the people have wanted to push the price, and we're coming into, pretty heavy resistance here with this sort of trend line going up. And we're obviously hitting the 200 SMA daily close, which, we hit that exactly now twice, and we've been rejected from that. For Ethereum, it's sort of a similar thing. I mean, we have this trend line here, and we also have the 200, and we touched it, and we are, sort of getting rejected from that as well. This would be a logical point for a pullback. This is definitely not where you want to be buying in. Okay, so let me just say that up front while people are still here. Actually, put in the comment section below if you believe this is a good time to buy in and why. And then also put, if not, when do you think is a good time to buy in and what are your targets? I want to hear your guys' thoughts. Please do that. So what I would want to see personally is for Ethereum to break through this trend line here and this SMA and then test back. Or what I would want to see is a test of this range in the 3,000 area of these moving averages, and then a resumption off of that. That's kind of what I would like to see with that. For Bitcoin, it's the same thing. It's similar how the 200. Obviously, every single time during this bull run that we have come to the 200, we've mainly blasted through, made it support, and rallied off of it. Now here, you can say, we tried to make it support a few times, we got rejected, but then we just blasted through it again. And look what we did. When we got rejected, we came down and made the 100 SMA support, and then we rocketed. So, we have to be objective. We have to understand the risks. Right now, a lot of money is flowing back into stocks and things due to the possible peace talks in Ukraine. So that's something that I, have also been sort of seeing. But one thing we have to remember is that there's still the possibility of recession here. There is definitely, if you look at the yield curve inversion that we saw in terms of the 5-year and the 30-year treasury yields invert for the first time since 2006. So what we're seeing basically is that people are more willing to lock up their money for 5 years than they're willing to lock up their money for 30 years. And so what we're seeing is an inversion in that yield curve. And what this has done in the past, it's predicted recessions. It doesn't predict recessions immediately. It predicts them ahead of time. And like this says, 2006 was the last time that we saw this. So let's keep that in mind for, in terms of, I think in today's world, there's a lot of headlines. And so there's a lot of talk of like Ethereum and Bitcoin are going to the moon, type stuff, even though we're right into resistance, right? So, there's basically the market, in my opinion, is drunk with money, and the Fed is reducing the balance sheet. They're raising interest rates, and this is going to make it harder to borrow money for people. So in that scenario, when it's harder to borrow money, risk assets don't do well in that environment, because a lot of times the people who are taking the bigger risks on those assets are also the people who are taking on leverage and borrowing money to then go and, buy these riskier assets. And, maybe let's switch gears here and just talk about, some of the bullish things that we're seeing here. Bitcoin is now going to be used by UST stablecoin by backing the stablecoin with Bitcoin. So, basically, UST is an algorithmic stablecoin. So usually what happens is when people buy, UST and the demand for UST goes up, then Luna is burned. So the Luna, it's basically an offsetting thing that happens with that currency. And so basically, if they do back it by Bitcoin, this could be something that sends Bitcoin a little bit higher. And so why should we care about this? Well, they're saying that it's already started. And so, it's just going to add to the volume each day for Bitcoin purchases. It's sort of like what's happened to Luna. If we look at the Luna price, we can see it's definitely been affected by this news. It's actually looking like it is at all-time highs. So, Luna has done really well with the fact that the UST stablecoin is actually backed by Luna and, by the burning of Luna. So if you own Luna, it's becoming more and more scarce as demand for the stablecoin goes up. They offer really high stable rewards on their stablecoin. You can look at Anchor Protocol. They offer a ton of rewards on that, but I think that they've been having some issues, and they offer like 20% APY on their stablecoin, which obviously is not sustainable, and so that's probably why they had to back their stablecoin with Bitcoin. Maybe they're going to lower those rates. I'm not sure. But as you can see, as someone who, to be honest, thought about getting in on Luna, around $1, when I was first in the Mirror protocol, it's tough to see this chart. At the same time, though, that's okay. Things happen. But if we look at it on the weekly as well, Luna is obviously making an all-time high. It'll probably close above 99, which is the previous close of the all-time high. It could ultimately play out to be like a double top, but it's obviously not somewhere where you'd probably want to buy in on Luna right now, with some of the moving averages, at levels like 72, even lower. So again, and then if we also look at, Ethereum, apparently the merge is at an all-time high for Google searches. Okay, so people are searching more than they ever have before, in terms of searching about the merge. And so the merge is probably going to happen in Q2. And why don't we listen to him talk about why he thinks all
up, whether it's in hardware wallets or in some cases, yield generating services like Abra. So we've seen a massive influx in deposits over the last 6 months, while exchanges have seen a net outflow, except for a short time frame when we saw some concentrated selling, maybe in early December. So by and large, I think that we've had a supply shock, and that supply shock has continued. And during this kind of extended accumulation phase, the question has always been, all right, it's clear that we have a supply shock. What's going to basically be the push that takes us kind of out of this wedge pattern that we were in, this accumulation phase that we were in. It was clear if you go back and look at historicals on any type of kind of invasion or the beginnings of most conflicts, markets tend to move higher. If you look at scenarios where markets are expecting significant rate hikes, usually for the next 12, 18, 24 months, markets tend to move higher, right? Especially in this model where you've got a whole bunch of free money and liquidity still coming into the system. So I think this kind of initial fear of rate hikes basically, leading to risk off or basically having a hangover on Bitcoin, I think that was all unfounded. And the technicals basically said, okay, we're basically still in a macro bull trend. The network effects are still there. They got delayed because of China. What's it going to take to get this kind of back on track? I think now, you mentioned earlier, I heard some talk about what's happening with Lunaterra. Clearly, that's a fantastic story, kind of reminiscent of both Grayscale and MicroStrategy happening 18 months ago at the same time. Now I'm hearing about Grayscale potentially suing regarding an ETF and forcing their hand, and you're talking about potential for a lot of new money coming in there. We're seeing tremendous institutional interest that we didn't see at this point last year. Last year we saw a lot of family office, high net worth money. So there's a whole bunch of things now that I think are pointing towards very positive momentum for Bitcoin. And then of course on Ethereum front, and we don't know which one is going to lead which. With this upgrade happening and the amount of Ethereum getting locked up in ETH 2.0 and the merge coming, all of these things are super exciting for the greater crypto narrative.
So hopefully you guys are able to hear all that. I muted myself. I don't know if I muted the audio there, but basically what he said is when traditionally when rate hikes happen, markets move higher after that. He's saying that there's free money and liquidity that are still coming into the market. He's saying there's network effects. He's saying there's institutional clients. So let's address some of those. In my opinion, rate hikes are actually, in some cases, they can be, traditionally bullish. But in this case, where we have basically printed more money than we ever have and have fueled this asset price gain, the printer is now stopping. So what he's saying, free money and liquidity, I'm not sure where he's getting that information. The free money train is over. They cannot keep printing money. They cannot allow more people to borrow extreme amounts of money with low rates. So the people who, again, have been taking risks are probably also the people who've been buying Bitcoin, Ethereum. And so this free money situation where we're kind of taking away the punch bowl, that is not good for crypto, okay? Not good for risk assets. So just realize that this has all the makings of a bear market rally, in my opinion. It is very hard to stomach because, once you start to see the chart go up, you start to, have these thoughts, and believe me, I'm having them as well, trying to keep the course here, because not only is the price pumping on Bitcoin, but the price is absolutely dumping on gold. So, because the fee, everyone again, this is to me like a bull market sell-off, and you can see, look at that perfect trend line that got scooped at the 50, okay, at 1892. And so we finally have come back and tested. Okay, we never really got that full test. I've been calling for a full test, and we gotten it, and people have bought that dip, and they've now at the same time sold Bitcoin. So it's interesting, the movements that we're seeing even in the market. If we look at sort of like the S&P, the Nasdaq, things like that, to me, this is a blow off top in a bear market rally. So, we'll sort of see how we got up to that moving average, and now we're selling off. It was something where if you had the ability to short, you probably could or did. And so in my opinion, this is again just another opportunity to sort of sell the rip, you know, and I don't know if this is the trend line that we sort of almost got to, yeah. But I mean, to me, we're still going to make a lower low on this. So I'm waiting for sort of this, like either this trend line. I don't think that will hold. Even this longer term one, I know that sounds crazy. Like it's probably not going to get that extreme, but you know, I do believe that we are still sort of going to have another fear sort of trade cycle play out here. And to me, it's almost good. It's almost a really good thing to be holding gold and to be holding crypto, which is what I'm doing. I'm sort of even here on my staked Ethereum and my precious metals, because they're literally trading opposite at this point. So if we look at the gold to Bitcoin chart, we can see, I don't know why this is always like hard to find. Let's see if I can find it with the XAU. Oh, let's see. Pax Gold, yeah. Okay, I'll do that. Pax Gold to Bitcoin. This has to be on there. I don't know what's going on. It should be here. Sorry, guys. I will get this. Here we go. Okay, so we have gold to Bitcoin testing the 200 here. Obviously, when Bitcoin rallies, I mean, we had a bit of a breakdown here, obviously, with the with this trend line. We tested it back, and then we dumped. We also had a bearish cross here. If we look at it on the weekly, doesn't look great. Obviously, we're looking at. I mean, to me, these markets are so manipulated at this point that it's almost like you have to sort of trade based on your principles, rather than based on like the technical analysis at times, which is why I think the crypto sniper has sort of been caught out in the wind here, because he has been trading on technicals and it has looked a certain way, right? And and he kind of forgot his principles a little bit, because you always want to have, I believe, exposure to crypto. I've said that, you know, multiple times now. You want to have that exposure because of the asymmetric upside of that trade. You know, if you think about, if you have 1% in crypto and it goes up 10x, you have 10%, you know, of your total net worth. If you have 10% and it goes up 10x, you have 100%. So you're essentially doubling your entire net worth there with just that 10%. And to me, again, this is not the time to FOMO in. I just wanted to make a quick video to just share my thoughts on some of this stuff. So hopefully you guys got something out of the video. If you did, please like, subscribe, share the video, and have a great day.